The S&P 500 is not a ticker symbol. It is not a boring line on a graph. And it certainly isn't just a retirement option your HR department mentioned once. The S&P 500 is the financial heartbeat of the American dream. It represents the 500 most ruthless, innovative, and profitable machines ever built by human hands, all working in unison to generate wealth while you sleep, eat, and live your life. But here is the cold, hard truth that most gurus won't tell you. Most people are watching this game from the nosebleed seats. They are stuck at level 0, paralyzed by the ignorance tax, watching their hard-earned dollars melt away under the heat of 2026 inflation. Are you tired of working for your money instead of demanding your money work for you? Today, we are drawing a line in the sand. We are embarking on a next few minutes journey from the absolute ground floor, $0 in the bank, to the construction of a permanent financial empire. This isn't a get-rich-quick scheme. It is a get-wealthy-for-certain blueprint. We are going to dismantle the psychological barriers that keep 90% of Americans broke. We are going to dive into the exact mechanics of how a single share of an ETF can become the cornerstone of a multi-generational legacy. Why should you stay for every minute of this 2-hour masterclass? Because the difference between a comfortable retirement and a limitless empire is found in the nuances of the levels we are about to uncover. We aren't just talking about buying a fund, we are talking about the evolution of your identity. By the end of this video, the stock market will no longer be a casino to you. It will be your personal printing press. If you've ever wondered why the rich get richer while you're spinning your wheels, the answer is hidden in level 3. I am going to show you the exact math that proves how a $100 a month habit can outperform a 6-figure salary. The gates are open. The data is verified. The path from $0 to empire starts right now. If you want to own the future instead of being a casualty of it, do not blink. This is your definitive guide to the S&P 500. Let's get to work. Welcome to level 0. This is the most crowded level in the world. It is the realm of the skeptic, the person who believes the stock market is a rigged casino for the elites, or worse, that they are too poor to participate. If you are sitting there with an empty brokerage account, you aren't just broke. You are being actively hunted by the silent predator known as inflation. In 2026, holding stagnant cash is a guaranteed way to lose 3% to 4% of your purchasing power every single year. At level 0, you are paying a mandatory ignorance tax to the system because you refuse to put your cap on the field. The biggest lie you've been told is that you need a fortune to start. That lie is designed to keep you in the workforce until you're 70. The truth? The S&P 500 doesn't care about your background, your degree, or your zip code. It only cares about time. Every day you wait for the perfect moment to invest is a day you are firing your hardest workers, your dollars. You are waiting for the market to dip? Market timing is a fool's errand that has cost Americans more wealth than any crash in history. Since the S&P 500's inception, it has returned an average of roughly 10% annually. Even if you invested at the absolute peak before the 2008 crash or the 2020 volatility, you would still be significantly up today if you simply stayed the course. To move from level 0 to level 1, you must undergo a psychological transformation. You have to stop viewing the market as a risk and start viewing your absence from the market as the ultimate risk. You are currently betting against American ingenuity, against the 500 most powerful CEOs, and against the collective progress of global commerce. That is a bet you will lose 100% of the time. Level 0 ends the moment you decide that $5 or $10 is enough to buy your first fractional share. It ends when you stop being a consumer of products and start becoming an owner of the companies that make them. You are no longer just a person with a bank account. You are a venture capitalist in the greatest economy on Earth. The chains of skepticism are heavy, but the math of the S&P 500 is stronger. It's time to stop watching the game and start owning the stadium. Level 1 is calling. Level 1 is where the theory dies and the reality of ownership begins. Reaching your first $1,000 in the S&P 500 is the most difficult psychological hurdle you will ever face. Why? Because this is the phase where you are working for your money harder than it is working for you. But do not be fooled by the modest balance. This $1,000 is the genetic code of your future empire. At this stage, you aren't just a spectator. You are a shareholder in Apple, Microsoft, Amazon, and 497 other titans. When a teenager in Tokyo buys an iPhone or a business in London pays for cloud computing, a fraction of that profit now flows toward your net worth. To dominate level 1, you must master the mechanics of the ETF, Exchange Traded Fund. You will hear names like VOO, SPY, and IVV. These are your vehicles. They all track the same index, but the expense ratio is where the battle is won or lost. In the world of investing, you don't get what you pay for. You get what you don't pay for. Selecting a fund with a 0.03% fee versus a 1% fee can mean the difference of hundreds of thousands of dollars over your lifetime. This is the stage where we introduce the mathematical engine of your empire, the compound interest formula. A equals P, 1 plus R times T to the power of NT. At level 1, your P is small, but your T time is massive. This formula is the only cheat code allowed in the financial markets. By putting that first $1,000 to work, you have triggered a chain reaction of compounding that, if left untouched, will grow exponentially. In the 2026 economic landscape, where traditional savings accounts barely keep pace with the cost of bread, the S&P 500 stands as the premier defensive and offensive weapon. Oak 1. The first $1,000 is the hardest because you're still thinking like a worker. The next $10,000 comes easier because you're thinking like an owner. Hook 2. Most people spend $1,000 on a phone that depreciates. You just spent it on the companies that make the phone. This level is about the great setup. You are building the foundation. You are learning the interface of your brokerage, setting up your first recurring contribution, and feeling the adrenaline of your first dividend payment, even if it's only enough to buy a cup of coffee. That coffee is the first taste of freedom. Level 1 is the proof of concept. Now it's time to scale. Welcome to the boring middle, the most dangerous phase of your journey. Level 2 is where the novelty of your first share wears off and the grind of the accumulator begins. You have crossed the $10,000 threshold, but you aren't wealthy yet. This is where most Americans fail. They see a $50,000 balance and think, I could buy a new truck with this, or I should pivot to a hot stock to speed things up. If you do that, you kill your empire in the cradle. At this level, your primary objective is not to be a genius. It is to be a machine. The secret weapon of the accumulator is dollar cost averaging, DCA. Most people fear market volatility. As a level 2 investor, you pray for it. When the S&P 500 drops 5% or 10%, the skeptic at level 0 panics and sells. But you see a back-to-school sale on the 500 greatest companies in America. By investing the same amount every month, regardless of the price, you mathematically force yourself to buy more shares when they are cheap and fewer when they are expensive. This is how you win the market without ever needing to predict the future. Oak 1. In the accumulator phase, a market crash is the greatest gift you will ever receive. While the world panics, your future self is getting a massive raise. Oak 2. The middle of the journey is where millionaires are actually made. The finish line is just where they pick up the trophy. Hook 3. If you can survive the temptation to spend your first $50,000, you have already defeated the ghost of poverty. In this 2026 economic climate, the accumulator must also master the tax shield. Every dollar you pay in unnecessary taxes is a dollar that cannot compound. Whether it's a Roth IRA or a 401k, you must wrap your S&P 500 assets in a protective layer that keeps Uncle Sam's hands off your growth. At $50,000, the math starts to get loud. A 10% annual return is now $5,000. That's a significant amount of passive labor being performed on your behalf. You are no longer just saving, you are building momentum. The flywheel is spinning, the friction is decreasing, and the gravity of your wealth is starting to pull more money toward you. Stay disciplined. The empire is no longer a dream, it's a mathematical inevitability. Level 3 is the moment the universe of finance shifts its gravity in your favor. Crossing the $100,000 threshold is the legendary first 6 figures, the milestone Charlie Munger famously described as a total nightmare to reach, but an absolute necessity to conquer. At this level, you transition from an accumulator to a believer. This is the stage where the math of the S&P 500 stops being a theoretical exercise and starts becoming a physical force of nature. For the first time in your life, your money is capable of earning more in a single year than a full-time minimum wage worker earns in 4. The psychological stakes at level 3 are monumental. When you had $1,000, a 10% market correction was a $100 annoyance, the cost of a dinner out. Now, at $100,000, that same 10% dip is a $10,000 evaporation of your net worth. This is where the diamond hands are forged. The believer understands that these fluctuations are not losses. They are the price of admission for the greatest wealth-building machine on earth. You must realize that a correction is simply the market shaking the branches to see which weak-handed investors will fall off. You stay attached to the tree. Welcome to the 100K Club, where your money finally has enough weight to start pulling the rest of the world toward you. Hook 2. This is the escape velocity phase. Once you hit this number, the gravitational pull of poverty officially loses its grip. Hook 3. If you can look at a $10,000 daily loss and smile because you're thinking about the 2036 recovery, you've officially graduated to the 1% mindset. In 2026, $100,000 in the S&P 500 is the ultimate peace of mind fund. It represents the critical mass where compounding begins to do the heavy lifting. If you never added another cent to this pile at an 8% return, this money would double roughly every 9 years. By the time you reach level 3, you have already done the hardest 80% of the work. You have built the engine. Now you are simply fueling it. You are no longer chasing the S&P 500, you are riding it. You have moved from a worker who saves to a capitalist who deploys. This is the level where your lifestyle stays the same, but your freedom expands exponentially. The empire is now visible on the horizon. Level 4 is the transition from getting rich to staying wealthy. You are now an optimizer. With a portfolio between $250,000 million, you have officially moved past the luck phase. You are no longer just a passenger on the S&P 500 train. You are the conductor, ensuring the engine runs at peak efficiency. At this stage, the sheer scale of your capital means that small, incremental improvements in your strategy can result in tens of thousands of dollars in extra gains. You are now playing a high-stakes game of optimization where fine-tuning is the primary objective. The optimizer begins to look beyond the basic VU or SPY ticker. You start exploring smart beta and factor investing, understanding how the S&P 500 is weighted and whether you want to tilt toward growth or value depending on the 2026 interest rate environment. This is the level where you master the art of tax loss harvesting, using market dips to offset future capital gains taxes, effectively turning a red day into a legal tax break. You aren't just watching the index go up, you are actively stripping away every ounce of friction that could slow your momentum. Hook 1. At $500,000, your S&P 500 portfolio isn't just an account. It's a high-performance engine that requires precision tuning to reach its top speed. Hook 2. You've reached the point where a 2% dividend yield is $10,000 in cold, hard cash. Passive income that pays your mortgage while you sleep. Hook 3. This is the Coast Fire threshold. You have officially won the right to never worry about a boss ever again. This is also the stage where you introduce rebalancing. Because you likely have other assets, you must ensure the S&P 500 remains the core of your empire without making you over-leveraged. In the current 2026 economy, the optimizer uses the S&P 500 as a benchmark for all other life decisions. If a real estate opportunity or a business venture doesn't offer a better risk-adjusted return than your S&P 500 index, you simply say no. Your time is now too valuable to waste on subpar returns. You have achieved financial gravity, where the sheer mass of your assets attracts new opportunities effortlessly. You are no longer looking for money. Money is looking for you. The foundation is poured, the walls are up, and the roof is being shingled. Level 5 is the final step into the throne room. You have arrived. At level 5, the Empire Builder phase, the S&P 500 is no longer just a savings vehicle. It is your personal sovereign wealth fund. Reaching the 7-figure milestone represents the ultimate triumph of discipline over impulse. At $1 million and beyond, the math of the S&P 500 becomes staggering. A modest 8% annual return now generates $80,000 in wealth, likely more than the median American household earns through 2,000 hours of physical and mental labor. You have successfully replaced your salary with a digital workforce that never gets tired, never asks for a raise, and never quits. At this level, your focus shifts from accumulation to preservation and legacy. You are now navigating the 4% rule with surgical precision. This is the gold standard of financial independence. The ability to withdraw 4% of your portfolio annually to cover all living expenses while the principal remains untouched, continuing to grow and outpace inflation. In the 2026 economic landscape, this is the definition of true sovereignty. You are no longer subject to the whims of a corporate supervisor or the volatility of the job market. You have built a fortress that is immune to the 9-to-5 cycle. Hook 1. At $1 million, you have officially fired your boss. At $5 million, you have officially bought back every hour of your remaining life. Hook 2. This is the level where you stop asking, what does it cost? And start asking, how does this impact my legacy? Hook 3. The Empire Builder doesn't just fund a retirement, they fund a future for descendants they will never meet. The Empire Builder also masters generational velocity. You are now utilizing advanced tools like the step-up and basis, ensuring that when you eventually pass this empire to your heirs, the decades of capital gains are shielded from heavy taxation. You are not just building wealth, you are building a dynasty. Your S&P 500 holdings in 2026 represent a stake in the continued dominance of American enterprise. Whether the market is in a bull run or a temporary retreat, your position is unshakable. You have reached the summit of the mountain. You started at level 0 with nothing but a dream and a $5 bill. And through the sheer power of the S&P 500, you have constructed a financial empire that will stand for generations. The game is won. Welcome to the throne. We have traveled through time, through mathematics, and through the psychological trenches of the American economy. You have seen the blueprint. You have seen how a zero balance at level 0 evolves into a $5 million sovereign state at level 5. But as we close this 2-hour masterclass, I need you to understand one final brutal truth. Knowledge without execution is the ultimate form of self-sabotage. The S&P 500 does not care if you watched this entire video. It only cares if you bought the shares. The market is a massive, uncaring machine that distributes wealth from the impatient and the indecisive to the disciplined and the brave. As we stand here in 2026, the world is louder and more distracting than ever. There will always be a headline telling you to wait. There will always be a new investment that promises the world in half the time. Ignore the noise. The S&P 500 has survived world wars, pandemics, and depressions, and it has emerged stronger every single time. It is the only bet where you are betting on the collective survival and greed of the 500 most powerful corporations on the planet. That is a winning bet. Hook 1. The best time to start your empire was 20 years ago. The second best time is the exact second this video ends. Hook 2. Don't let your fear of a 10% drop today rob you of a 1,000% gain tomorrow. Hook 3. The difference between being a spectator and a shareholder is the difference between a life of want and a life of will. Your path forward is simple, but it is not easy. It requires you to automate your discipline. Go to your brokerage, set up your recurring buy, and forget the password if you have to. Let the index do what it was designed to do. You are no longer a victim of the economy. You are an owner of it. You have the levels, you have the math, and now you have the responsibility. The journey from zero to empire isn't about the money. It's about who you become to earn that money. It's about the person who can look at a screen of red and see a field of green. It's about the person who values their future time more than their present vanity. I'll see you at level 5. The gates are open. Now, go build your empire. Class dismissed.